Hello, everyone. You're welcome to this lesson on bearish breaker block. Now, have I usually pick out this right up, though they're looking wrong, but it's important for me to be able to guide you through this lesson in order for you to catch the key points of bearish breaker blocks. Now, we'll be talking about the definition, the visual representation, the key takeaway to maximize profits of bearish breaker blocks, the key takeaway, and then next we'll be looking for the entries. So I'm trying to make this lecture as short as possible. Now we'll start off with the definition. A bearish breaker block is a technical analysis popular with the smart money concept. It identifies a specific price level where bullish move has failed and it's likely to act as a strong resistance in the future. In essence, it's a failed bullish order block. When price breaks aggressively below the bullish order block that was supposed to support the price, it signals a significant shift in market sentiment. This broken order block now becomes high probability area to enter a short position. Now here's a visual representation of bearish breaker block. Size this up a bit. You see the price moves from point A to point B, then to point C. Then this other blocks keeps price moving higher. It moves only higher for it to drop down. So point A, point B, point C. Why D? Then the price comes crashing down. After it comes crashing down, you wait for it to retest this level. This is the last up close candle, as the last series of up close candle that was broken through. Now look for the open of this candle to act as a resistance. Now we were supposed to, if this high of these bearish candles were supposed to keep price going higher. When they came down, it's supposed to go higher, ready for it to crash down. Now if it crash down and you notice an FVG forming here, a fair value gap forming here, now for price to tap into this up close candle here. Once that price taps into, that's your opportunity to go short. Let me see if I can get this in hours. I see price was making a higher high, made a higher high, then made a higher low, then made another higher high. Instead of stopping here to make a higher low before it came down, crashing through this point. Once it come down, crashing through this point, you expect it to pick liquidity here before continuing lower. So what look out for, in essence, key points to take is, what you expect to look for is where the price crashed through a price level that was supposed to be a support. Now, instead of being at a support, it becomes resistance. See this level here, it becomes resistance, and that's what we have here. In here, made a higher high, higher low. Higher high only for it to make a lower low, crashing through this level here. Once an impulsive move, once you notice an impulsive move in price action, look for this close candle, that's for bearish breaker blocks. Look for these up close candles. Look for price to come to this level here to take liquidity before continuing low. It's important not to chase price actions. Not because this impulsive move downward is it, so that the breaker block is forming, let's go. No, look for it to retest. That's for confirmation before you continue, before you can take your trade going lower. Now, here are key takeaways to maximize profit. Trading the breaker block isn't just about identifying it. It's about execution, context, and risk management. Confirmation is king. Wait for the market structure to shift, which is impossible downward. We will not try to predict breaker block before it forms. The entire setup is only valid after price has aggressively broken the previous strong level, which is this level here. Testing the mission dominant is risky. The highest probability trade comes from patient and retest. Actionable tip: mark the last swing low, wait for the candle to close decisively below it. This happens probably in almost all time frames. But since price is fractal, be ready to, once you see it reacting like that, showing an impulsive move downward when you zone out to your lower time frame or reach your running time frame and wait for that retest. And the part of retest of this last series of up close candles, that's where you now look for your trade to enter after that impulsive. Make sure it's pushed decisively below this low. So these are practical. That's why I put that way so that the key points will be in July for you to say, okay, you can even take notes while the UI, or you can pause the video and take notes at any time. So confirmation is key wood for the price structure to market structure to shift. Do not try to predict the breaker below before it forms. The entire setup is only valid after price has aggressively broken the prior swing low. Chasing the initial downward movement is risky. The highest probability trades come from patient and recent retest. Now you're reading about the narrative. You mark the last swing low, wait for the candle to close decidedly below it. Only then will you identify the breaker block and then wait for retest. Secondly, confluence is your king. The breaker block on its way is called, but the breaker block with the multiple confirmation factor is an A+ setup. Look for fair value gap, liquidity grab. Let me get this down here. Look for fair value gap, you have a fair value gap. Look for liquidity grab, that's this one. Taking down this high, which was supposed to act as a support for the price to go higher, only for it to break down below with an impulsive price action, impulsive momentum, rather. Sorry about. And you have your fair value gap, you have your liquidity grab, then higher time frame point of interest. There's just a 15 minutes breaker block forming within a 4-hour or daily bearish order block or supply zone trading in alignment with higher time frame trend drastically increases your odds of success. Now here's the entry. Paramount, of which we discussed here. Practically here in the patience is paramount. Avoid chasing the initial breakout. Wood for the price to retrace back to the bullish breaker block. This retest is good. I think I to the sorry that's no to the root for price to retrace back to the pure mesh rather. I have this wrong. Hold on. Bearish breaker. Yes. So we see confirmation on the lower time frame for more precise entries. Now let's take a look at the chart to see if this is actually how it does happen. All this, just like I said in order of my lessons, they are not entirely a walk alone factor if you don't have confidence that fair value gap forming after the impulsive low. This is an hour time frame. Let's dive in deeper. This is Wednesday, 1st of October. Let's see how price interacted here. There is an impulsive move up. The price was making higher highs, higher highs, higher highs, higher low, higher highs, higher low, and then higher high. Or we can look around to see, but I think this was a very aggressive move upward. Let's see if we could have seen a liquidity sweep grab somewhere. But then, you notice something. This isn't really a clean price action, if I'm to say. But something like this move now, the price isn't replaceable. I think if you zoom into a 15-minute time frame, we might find some trade to take here. But then I think the most significant one was taken from this this higher high. And this, I think what should be one was that was erupting at this London session, because it did not take this is where I'm supposed to take my trade, which didn't occur. So I think I'm going to let that go. And besides letting that go, it didn't practically, you see, price keeps repeating, fluctuating around here. Let's look somewhere from the chart. See, we started growing up from here, ramping up. Price was moving up, higher highs and higher lows. Then we made this higher high. And then from where I can see there's a clear liquidity grab, liquidity sweep, stop horns, whichever way. There's a clear liquidity sweep from this area as well. Liquidity all resting here. There's a clean liquidity. Now look at this. That is the last up close candle. And if you look here deeper, you can find a tiny fair value gap around here. See, a tiny fair value gap forming around here. I mean, this just as simple as it can get. You look at price coming back there, or for it to take straight after this impulsive word downward. You see, price gradually comes back here, and then off it sells off. If you started chasing price here, that oh, impossible move downward, we can rest impossible ways that somehow this price is going to continue about. That's where you don't have confidence. That means you are not sure. It's not an A plus trade. So I'd rather write it, work out the, oh, this is the open of this candle. Mark out the low of this candle. Look for this fair value gap here. See price jumping in there, or for it to continue selling off. Let's look somewhere again. Hopefully we can find most of the setup. If you're conversant with this reversal arrays, they are just as simple as it gets. You wait for price to from an impulsive look. If it's you first, you identify those in uptrend, higher high, higher lows, higher high, higher low, and then it takes off. Like a candle like this signifies that if a candle like this, that means a lot of buyers are, but then they returned bearish. Now this is the last up close candle. Up close candle. I didn't see a favorable gap around here, so I might not take this trade. And besides this Asian session, this is around 22, there's 10 or so. Asian session is usually very consolidating. But if you do now proper back testing, you can find out in around Asian session if you understand how your accumulation, manipulation, and distribution works. You can always find setup, but then I would rather call to the markets when there is high liquidity, that is New York AM session. Of course, there are lots of opportunities hanging around London session, but New York AM session is one, the session overlaps with the London session, so you have the highest liquidity, and that session is that's when you have the no, that's when you have the New York Stock Exchange open, then they're taking massive trades. That's when the most of the trades happen. Let's look for another. Okay, there's a liquidity void here, but it did win higher high, higher lows, and then there was a clean sweep down here. Then look at this level now. Say you should take your sell from this point. Now, if you take yourself from this from this first open candle after this liquidity void here, where there was no trading, no or just trading here. If you take yourself from this, see the price moves up only for it to sell off. So practically, right, in a simple manner, you look for higher highs and higher low, higher high and higher low, higher highs and higher low. And price liquidity, initial liquidity, previous liquidity. Look for that's where you come in and look for a fair value gap. It happens everywhere in the market. So this gold USD, but this bearish breaker block comes in at every and anytime. I prefer to come into the market when in a New York AM session, the London session and the New York AM session. I prefer that I kind of back tested that one. That's where I can say okay confidently from time in row or it has been meant to act like this. When it doesn't, that's I would say okay, probably some settled Naganos came in around some big shorts came in and ramped up the price from this level again. But then, but this is the last bearish. Here's the last up close candle here. If you had your under from here now, you see the price coming into that fair value gap. If it comes into that fair value, I didn't mark this thing right. If it comes to that fair value gap, then that's your sell. That's your sell signal. That's your sell signal at any time. That's your sell signal. Therefore, this is a bullish breaker block. What we're talking about is bearish breaker blocks. Right here, we have high highs, high, but I don't know how I can go back into time to check this. But then we cannot find the fair value gap here. But the price still retraced into it all the same after this impulsive move downward, which we can want damp if you had maybe or before the advent of SMC, smart connect concept. This used to be called the bearish engulfing candle, where this candle formed and then there is an impulsive move downward as after the liquidity sweep. I think this can be called liquidity because there's an impulsive move high from here. That the liquidity sweep, look at this high. To what you do next, take your trades from this place. So we can check and backtest. It's very important to backtest because backtest gives every trader confidence. I do not see a valid fair value gap around here. And I always check the time around there. Well, it is New York PM session. But damn, if you backtest, you can still see some way to run around it. But then I trick during the New York AM session. That's where I knew that liquidity lies heavily, and then a lot of big shots are tricking their trades, and it's not dependent on how much of sentiment, market sentiment, but then just make sure to tell you that okay, they have algos that can interpret whatever news that comes out. Tell you, okay, well, this market is bearish, but think that at the point the market is very well at the point the buyers will think it's above or bought over. So they find the reference point, the institutional reference point, and take their trades off. So look at this, you see it's from putting down. Let's look at somewhere there. There's an intermediate candle again. There is a sweep of this high. Look at this liquidity sweep. Look at this liquidity lying here. These sellers, I think, okay, maybe the market is going down, and then they just trade only for the market to ramp up. They ramp up, and then it took off this liquidity around here. So there was around 13 to 21 days after New York launch session. Then after this liquidity sweep, look at what happens here. Creates a fair value gap, which is another sound point of entry. From where it sells off. So it's important to notice the key points. First, you must identify your trend. For trading the bearish breaker block. Identify the market is clearing an uptrend. Let's go from downward session or maybe New York session. It's clearing uptrend, making an uptrend. And at a certain time, you see a liquidity sweep. So and over here is doing. There has been a bit of consolidation, and then you see this liquidity sweep, a sweep of liquidity, and then a run low. Then you see a fair value gap all appearing for you to take your trades off. We talk now about this bearish breaker block in a later time, but at least from those few examples, you can see that now you can go to your chart and backtest it. Look at it, you can see it's happening almost all everywhere around the chart. But just that you take your trade off. You take the factors that you need to work with for a bearish breaker block is all here. It's all and these key points. All you refine your trade, your take profit is practically the initial significant loss significant solo platform when where it's coming down. And this one should grow logic take profit. Then for take profit one. Yes. And so just we'll come to an end on this lecture. Please like us, subscribe. Or hope to be meeting you again. Thank you.